that. But we have Tata Communications Q4 earnings, which were a bit subdued. Their margins contracted, the EBITDA declined, while the revenue growth was in low single digit. The management reiterated their ambition of doubling data revenue by FY27 and getting back to 23 to 25% EBITDA margins in the medium term. Amur S Lakshminarayanan, who's the MD and CEO of the company, joins us now. Sir, thank you so much for joining in. I want to start by asking you about the reason behind the weaker data revenue growth. This, data business was your main growth driver for the last many years. So why are you seeing this kind of slowdown? And what kind of growth trajectory do you expect? Because, given that there is a bit of a slowdown, do you think that a 15 to 20% growth is possible?
I want to emphasize the fact that if you look at the overall year's number, data grew by 20%.
Mr. Lakshminarayanan, we can't hear you very well. Okay, can we try one more time?
Yeah. Can you hear me now?
Actually, we're having a bit of an issue with your audio. So what I'll do is I'll come back to you in a bit. We'll just try and fix that audio. It's a bit scratchy there. Just wanted to mention a couple of stocks that are bucking the trend at the moment. You have Maruti, which is up almost about 0.7%. SBI is up almost about 0.5%. And Reliance is batting for the bulls this morning. So just keep an eye out on that. By the way, the mid-cap index is now trending, almost moving into the green. There are some stocks which are not doing too badly. IGL is up about 5%. PFC is back in the green in a big way, up about 4% or so. IRB, Infra, REC, these are stocks that are up well in the green. So yes, the mid-cap index is now trending in the green. The advanced decline ratio is also pretty good today. So today is not such a bad outcome. Given what we've had in the last couple of days, today is not such a bad outcome for sure. I think we are back with Mr. Lakshminarayanan. Sir, you were telling me about, your data revenue business, right? It has seen a bit of a slowdown. So in terms of a timeline, when do you see it recovering? And is this 15 to 20% growth possible for FY25?
Yeah, I was just mentioning, if you look at the overall year, the data revenues grew by 22% last year. While we saw some deceleration over the quarters, but overall for the year, the data revenues grew by 22%. Last year was a phenomenal year for us, having invested in a lot of organic products and platform investments that we made. We also acquired 2 companies, and we are busy in the process of integrating them, both the switch in the media side of the business, as well as on the interaction fabric, the Kalera acquisition that we did. So we feel quite confident about the portfolio of the network fabric, the interaction fabric, the cloud and security fabric, and the IoT fabric. The IoT fabric last year did not grow as much as they did the previous year, but all the other fabrics grew very well. So going into this year, barring the cautiousness that we see in the international markets, we are quite confident that we will be even more relevant for our customers and participate in deals with very large customers.
So can you tell me a little bit about the order booking? You've just said that it was weaker than expected, but can you just quantify it for us? How much weaker, and when do you think the recovery can come through on order booking?
Order booking is slow. I mean, it's very hard to predict. I just came back from a trip meeting customers. The very encouraging thing for us is we are able to participate in much larger conversations than before. And that gives us the confidence that as and when it opens up, we will be able to participate. And of course, we need to win those deals. But our participation levels are increasing. Our investments in the markets to increase our coverage is helping us. But closure is slower. While we don't call out the ACV numbers, partly because in this business the ACV numbers are a bit difficult to quantify. There is fixed contracts in the network business, but also increasingly more usage business that comes. So you might sign a contract, but the usage has to ramp up. So the ACV numbers don't really directly relate to the revenues as lead indicators. But as and when the situation improves, the closure should increase. Another point I would like to point out is our next-gen connectivity last year grew upwards of 30%. So there are, the next-gen connectivity has organically grown very well. The interaction fabric grew very well, organically somewhat muted, but because of the color acquisition, we showed very good growth. And similarly, the media business organically grew in double digits. Of course, with the switch added on, we showed much better growth as well. So the focus for us going forward is going to be integrating all of these acquisitions, participate in the market a lot more aggressively, and drive growth.
Got it, sir.
Yeah.
I got it. Mr. Lakshminarayanan, good morning. Prashant here. Just to sort of dial back and get that number from you if possible, sir, on the revenue front. Would it be between 15 and 20% in FY25?
No, see, we don't give any quarterly and yearly guidance, Prashant. You know that.
Is it in the ballpark or is it wildly off?
No, it's not fair for me to give any guidance at all. So all I would say is, when we said that we wanted to double our revenues, the expectations that we have internally is that we would be growing at the
data revenue doubling that you talked about. That's still on track by FY27.
Well, our ambitions are very much in track. The investments that we are making is towards that. Last year, of course, aided by inorganic, we grew 22%. So going forward, we need to keep up the momentum, combining the entities that we've integrated organically to deliver the kind of growth between 15 to 20% is what we would expect to do. And that is what we are working towards. So the encouraging thing that I would again point out is the relevance that we have, the ability to participate in much larger deals with customers have only increased because of all the investments that we have made.
Okay, all right. Hi, good morning, Mr. Lakshminarayanan, and thanks a lot for joining in. So you've given us fair color on the revenue growth trajectory. What about margins? In the last few years, margins have come down to around 20% odd, but you're guiding for some kind of recovery in FY25. Could you tell us what are the triggers and how much could it recover? And also by FY27, should we assume you get to that band of 23 to 25% that you've been guiding for?
Yes, absolutely. I think I clarified on the margin side. So I would like to if you split the business by the core business, taking away the investments that we made on acquisitions and acquisition-related costs, the margin still would be in the ballpark of the 23%, right? The second factor that we called out are some of the subsidiaries were a drag on the margins, and we said we were going to do a strategic review of the subsidiaries in order to improve the margins. And the third lever we have is all the digital businesses which were intrinsically of a lower margin so far would organically start delivering more margin because of the operating leverage. So these are the levers that we have that we will operate in the coming year and the next 2 years to get it back to the 23 to 25%.
Okay, all right. And in the near term, for FY25, what should we work with? Because the margins actually breached 20% on the downside in Q4. So if you could quantify it to some extent, we got it. In the next 2 to 3 years, you get to 23 to 25%. But in the near term, what is it? And also I wanted to ask you about your net debt to EBITDA. That stood at around 2.16, but you've said that it's likely to come down to sub 2. Does it happen in the first half of the fiscal? So give us some color on margins as well as net debt to EBITDA number.
Yeah. So again, I don't want to give anything on a quarterly basis on a short term in FY25. We will see an increasing trajectory of the margins because it has to get back to 23% in the next couple of years. And I talked about all the levers that we are operating. I think the foremost focus for us is integrating the acquisitions that we did and drive the synergies both on the revenue side and on the cost side. So that's one of the major levers that we will be operating on. And we are quite hopeful of improving the margins. And as we improve the margins, the cash conversion for us has been very good. And we will be able to pare down the debt as well. And we have to remember, we are in a business where the portfolios have significantly transformed, right? From the nature of the business that we were. Our digital business now are approaching 50%. That was one of the goals that we laid out in our strategy in 2020. And for transforming the portfolio, we need to make a lot of investments on products, platforms, people, capabilities. And without those investments, the growth would not come. So I think those are the phases we are in making those investments, and we are quite certain and hopeful that the growth.
But the net debt to EBITDA, Mr. Lakshminarayanan, sorry, we need to just try to get that number out for you. Net debt to EBITDA, you said it comes down to 2. It happens in the first half of the fiscal?
Again, I said I don't want to give anything on the quarterly or a half-yearly basis. That is not what I do. I will lay out my plans for the medium term, and I reiterate the numbers that we are aiming for.
Sure. Mr. Lakshminarayanan, since you're not giving us numbers, can you at least tell us what the trajectory is in terms of decision-making by clients? Are the orders getting deferred? Are they getting delayed? Do you fear that there could be some large orders getting deferred or maybe even getting cancelled as well? Just trying to understand what the trend could be over the next couple of months.
Yeah. No, I think the orders are and were getting delayed. The funnel, we are continuing to improve the funnel by adding more into the funnel. In the network, particularly in the network business, not so much in the interaction business, where switching vendors or adding new vendors is relatively easy. In the network, in the international markets where we win larger deals, it's largely, they replace the incumbents with us. In those kind of situations, it's like touching the live wire. So they are a bit conservative, and with uncertainty around their own organization and changes that they have seen, there is some reticence to change, is what we've been observing. But we are, as the funnel improves, we think that our conversion would also begin to improve.
That margin bit, since it's a couple of years out, Mr. Lakshminarayanan, maybe let me try and ask you to request you to fine tune it if you can. Since it is 20 and getting to 23 is going to be a big improvement. And of course, getting to near to 25 is going to be even better. But would you want to fine tune it a little bit, closer to 23? I mean, we know the range, but
you mean in 2 years' time?
Yes.
Yeah, no, in 2 years' time, we'll definitely be in 23. Whether we cross 23 is a question that we have to ask ourselves.
Okay, so I mean, if you wanted to go with one number, that'll be, 23 in 2 years' time. That's the target. All right, got that. Thank you very much, Mr. Lakshminarayanan. Great to have you with us here. Thank you for your time. Appreciate it very much. Those comments here on CNBC TV18.